Welcome back to Trading 360. I'm Nicole Petalides. Time for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Great to see you both. Good morning. How you been feeling, Alan? We just had Rebecca on talking about a big pullback to come. What's on your mind?
Well, I've been doing this for 35 years, all right? And we've been in a lower left to upper right market, continuing to make new highs with the exception of the financial crisis in 2008, which was a big deal. And yes, we had the dot-com pullback, but those stocks all rallied back and made new highs in relatively short periods of time. So I'm not to say anything can happen in this market. We could rally 30% or we could sell off 30%. It's about money management. It's about having a plan, put in stop losses to protect positions that you have, learn to manage your money and manage your trades. But I want to point out that the VIX is still 40% off its lows. So there's a lot of downside potential in the VIX, a lot of upside in the S&P. And if it's that simple, make it that simple. We've all seen the movie The Big Short, and they, instead of just buying puts, they did complicated derivatives. You can just buy S&P puts and sleep easy at night and have some insurance. Buy some puts at 10% below where the market is right now for 6 months out in the S&P. And guess what? If the S&P doesn't sell off, it was your insurance. You slept well. That's the way I like to live my life, not being a doom and gloomer.
Okay. I hear you. So first up, we have the Trump trade, or Trump media, I should say, because 3 months, the Trump media stock, DJT, is up about 100%.
Right.
A lot of people have been calling this a meme stock. I mean, I don't know. Is he going on Truth Social throughout his presidency? We'll have a lot to see going forward. What do you think the trade is, or what are you watching when it comes to Trump media?
Okay, first of all, none of that matters to me. I trade what I see. I trade the chart. Now, the fundamentals are not here. Absolutely no fundamental reason for this stock to be where it is or for it to go up higher. That doesn't mean that it can't make a lot of moves. Now, I'm an options trader, limited risk options trader, and this is a probability play. That's all this is. I don't care what the ticker is, what I trade. I just make sure that it's a good liquid market. I'll trade any market up, down, sideways, as long as I can control my risk and I can increase my probability of success. Now, this is a stock that's been between 10 and 50, so 30 is an important pivot. We held this 30 level. Technically, this held that important level, which was, a crucial support of this halfway. And if we get this recovery back to that 50 top, that's a $20 move on that old high, sends it to 70. I'm not asking to try and figure out what's going to be the catalyst. I don't know and I don't care. I'm seeing money flow into this stock, which is my indicator, which is smart money accumulation on the long side of this stock. Somebody smarter than me is accumulating big positions on the upside. So I'm going to follow the money. It's that simple. I'm looking at a January option. A January 30 call has the right to be long from 30. We're at, 35 or so? So it's $5 in the money. That option's trading for about 7. So it's a deep in the money option. Worst case scenario, obviously you can put a stop loss on your option. Worst case scenario is below 30 at expiration. It expires. I'm not buying hundreds of options on this. This is a probability play, just like any other trade. It's not personal, and that's what trading has to be. Trading has to be unemotional and trade what you see in the charts.
Okay, so he's following the money here, Rick. Let's see. What do you say when you see the chart?
Well, I think I would echo a lot of what Alan said. Regardless of any of your opinions about anything, the price that it traded at is the price that it traded at. And here we are now. When we look at the price action, we can see that there are some important areas here. And really, it's an extraordinary chart by many measures here. But this is an area of importance here between our light green and dark green lines, kind of where price kept bottoming out and then making like a more extreme low. So between like 25 to 29, that was kind of a support zone. We did make a significant dip beyond that point, but it came back into focus here more recently. You can also see this very light yellow line here, this vertical line. Election day, November 5th, November 6th, obviously an important day for this particular stock here, but short-term severe downtrend has been broken. Uptrend in play off of these 52-week lows right here, our white line. Look at this huge confluence, all our moving averages, the volume profile, point of control, everything kind of coming together between like 29 29 to 32, which is where we kind of formed a base and have made our way back to the upside now. However, not really making a good showing today, as good as it could be here, because we are stuck at this gap level right now, just below 36 here. Momentum rising still. Short-term red trend line going downward, broken above 50. Momentum trending upward here. So now, if we were to look at some support and resistance here, the broader picture, kind of we have our two white trend lines here going across the lows and the high areas. So a triangular shape, really. Here is where we are now. Blue line, 38, 30 plus $8 paid. That was Alan's trade. That was his break even there. So looking for a move beyond that area. +1 standard deviation channel, 40.74 could be resistance. And then this old high point right here near about 46. To the downside, our big confluence right there that we talked about already between like 29 to 32. That's a key area to hold.
Okay. Thank you for that, Rick Ducat. Final thoughts on this one, Alan?
You just got to trade what the chart tells you. And, I found in my long career that opinions and biases can be very expensive. It's an opportunity like each and every trade in front of you. It is what it is.
Yeah, understood. So over 3 months, JD.com's up almost 40%, but the last 1 month to the downside to the tune of about 11%. So some volatility in this name. Where do you think this could be headed and why?
Well, it had been a strong stock, and China stocks had that breakout, but they've had some disappointment and come back to their breakout level, is what markets often do, give us a secondary chance. So it's been between 25 and 45 for 2 months. 35 is an important midpoint to look at. That's also the May top. So it broke out and it came back to that level, which, technically that's sometimes what you look for. A breakout of this $20 range targets 65. So there's a lot more upside in this. Again, I'm seeing the money flow. I'm not going to try and predict the China story, but risk reward, this stock has sold off its highs and it's setting itself up again. Again, that money flow indicator showing that institutions or some big players are building long positions in this stock at these levels. So I'm looking at the March 30 call. Again, that's trading for about 8. It's 6.5 in the money. It's got 3 months of time, and we'll see if we can get back to that range top again and then test it. And if it breaks out, then obviously there's significant money made in these in the money options.
Okay, understood. And to your point, we saw those Chinese stocks really get a pop. There was a lot of stimulus.
Right.
There was hope for more stimulus, and then this sell-off, right, that we saw. Rick, some of your thoughts on the technicals, please.
I certainly understand, Nicole, why you chose to highlight the past few months, because it's really been a strong time for the China sector as a whole. I actually chose to do the opposite. I wanted to look at the last 2 years here, because you can really see how difficult the situation has been. We had highs all the way back here near 68. We've lost, close to 50% of the value from that point here. And, kind of when you look along the way, kind of this gradual kind of bottoming out here around 20 and then starting to make a bit of a resurgence once again here. We've got plenty of horizontal levels that are important along the way, but the one I really want to highlight is right around here. This is around where we had our high points. This is marking specifically the best close that we had after this big gap down. 47.92. That's about where we stopped during our most recent run up here, during the China news that we had recently and sent the stock surging. So that was a significant point now. We have struggled to get above that point once again, so it's kind of a high water mark to keep an eye on here. More recently, though, we had this period of consolidation, kind of a very range-bound point around 40 here, dropped off a little bit, formed this falling wedge type shape. Now a bit of a push to the upside, but kind of struggling, still kind of sandwiched between our yellow 21-day and orange 63-day moving averages here. Our green line here, 35.70. That was a notable stopping point for price frequently. Also was the high point right here, so that could be a supportive area to hold. Momentum, downward trend line has been broken, just like price, trending upward here, not really hanging out above the 50 midline though, so that's one thing the bulls would want to be on the lookout for, would be a strong push above that area. area here. Now to zoom in a little bit, we can see once again 38, our blue strike, our blue line here matches up with Allen's break even after factoring in his strike price, so around 38. Matches up with those old recent highs that we saw there. I had highlighted 38.60, kind of the same general area. That was the low points here that I was watching there. A little bit of a volume node right here around 40, and then +1 standard deviation channel matches up with a gap in high points near 42. To the downside, around here, our low point there, our purple 252 EMA, a large volume node, all around 32 to 32.50 or so. That would be a key downside area.
Okay, thank you for that. And I'm glad you had the long-term chart, a good, nice long-term perspective, and that's important, Alan, when you're charting, to look at all of these things put together, right? And I'm sure you're always doing exactly that. I mean, you must have some favorite go-to techniques that you use on a regular basis. Any final thoughts there? And then we'll get to Novink, which I'm not as familiar with.
So it's just China is going to come back into play, and I think we've had a heavy-duty profit-taking round, and I'm just optimistic on the markets around the world. I think China could figure itself out once again, as it's done before. Everybody didn't believe Japan's stock market was going to come back. It did. Everybody didn't believe China's market was going to bounce earlier this year, and it did. So I think it's set up to do so again, and this is the way to play with these limited risk in the money positions.
Yeah. And this name Novink, by the way, that you're getting to here has been a laggard. It's down about 20% this year. Tell me a little bit about it and why you know it, why you're watching the technicals on this one.
Well, what we've seen is really interesting. I always use the phrase, it all comes back to commodities, but I've changed my tune in this energy sector because I've been so disappointed by crude oil over and over and over again that it can't get a bullish breakout. Maybe this is the time. I don't know. But if you look at the charts on XLE, the energy stock, the energy sector is up at its highs, but crude oil is not. So that's in itself is very interesting. But this is a stock that is in that sector. I know we've talked in the past, Schlumberger, Halliburton, Oxy, all of these stocks have bottomed out and made a base. This one had bullish divergence, which is the indicator I use each and every week. On our show here that I talk about stocks that make new lows but not new highs, implied volatility. That's a sign of a sentiment shift, and they can make a gentle bottom. It also has that money flow that I look for. So you're seeing money seeing the same things as this bottom. We've been between 15 and 17 for 4 months. A breakout of the range target's 19. In the big picture, we've been between 15 and 20 for a year. So 1750 is kind of the midpoint. And, we could get a bounce up to that range top. So, again, a small move. We're at $16 right now. I'm looking at a May option. May has 6 months of time. A 14 call, which is below the low, is trading at $275. And, again, it's $2 in the money. So it's like being long from below the low and got plenty of time. And if we just get up to that, with that 19 level, that option will be worth 5, and so we're looking at nearly 100% in that option. It's just math, it's just probability, and it's following the money, and it's following that bullish divergence sentiment shift.
Okay, let's see what Rick says about the charts. Rick?
Sure. Another interesting chart here. Some choppy activity earlier in the year, but more recently we can see now kind of a downward sloping trend line here is our broader pattern, a shorter term upward sloping trend line going across those 52-week lows near 15. It could also be kind of more like a range here because we're centered around our volume profile point of control, kind of a persistent ceiling here and a bottom that was formed here. So kind of depends on how you look at these things, but I also noticed divergence, bullish divergence, a different type than what Alan was talking about. What I'm looking at is momentum because price made new closing lows. RSI made a higher low. So we had a mismatch between price and momentum. This is typically regarded as a more positive sign here, but momentum not cooperating today, slipping below that 50 midline as price struggles to retake these moving averages. We're below our yellow 21-day and orange 63-day and our volume profile point of control, and we've kind of failed at this trend line here. So a momentary temporary setback perhaps, but if we were to look at support and resistance here, we can see, our green line, 1565, that's a repeated low point here, and then our extreme low comes in near 1499, so around 15 there. Key area right here to overcome, right around 16. All the indicators I just mentioned in our trend line here, 1675, Allen's strike price plus his trade break even there, so that's our blue line. Matching up with those highs, for perspective, 19 would be, all the way up here beyond our gap levels and our standard deviation channels, sir, but certainly not out of the realm of possibility. It was on the earlier chart here. Certainly not impossible.
Right, understood. Okay, Rick, thanks for all those great charts. Final thought, Alan Nuckman, for the big three today.
My final thought is just trade your plan. We're going to get a lot of emotional and a lot of volatility. It's going to be a stock pickers market, winners and losers. It's not going to be as much of a macro market. And so you've got to understand that we've got to be extra disciplined. But that means more opportunity, in my opinion, for the future. And it should be a great 4 years of trading.
All right. Alan Nuckman, thank you for that. BullseyeOption.com. Rick Ducat there on the charts. Good to see you both for the big three today.